All right, welcome all to the webinar Introduction to the Lab. The format of this webinar will be a half-an-hour presentation followed by a question and answer session. If you have questions during the webinar, type them into the chat box anytime. We'll respond to them verbally during the Q&A segment. We are also happy to answer questions via email after the event. Just so you know, we are recording the presentation and we'll post it to the events page on the lab's website. The same is true for the slides that we are using today. And we'll send you the link when it's available. And finally, please keep your mics on mute. Now I hand it off to Ben Brochet, the lab's global program manager and your host today. Hi, Ben.
Thanks so much, Julio. My name is Ben Brochet. I'm Global Program Manager for the lab, as Julio mentioned. For those who aren't familiar with Climate Policy Initiative, or CPI, the lab is one of our programs. CPI's mission is to help governments, businesses, and financial institutions drive growth while addressing climate change. We're a global institution with offices in Brazil, India, Indonesia, Kenya, the UK, and the US. So thanks so much for being here and for your interest in the lab today. Without further ado, let's go ahead and get started with today's agenda. So we'll kick things off by explaining how the lab works, so we understand how the lab develops climate finance instruments from idea to pilot. Then my colleague, Carla Orrego, will walk you through 3 case studies on recent lab instruments, showing how they were developed under the lab program. After that, I'll go through the selection process and talk a little bit more about what the lab is looking for. Following the presentations, we'll invite you all to ask questions. Please don't be shy. In fact, you can go ahead and start typing your questions in right now or at any time throughout the webinar into the chat box, and we'll go ahead and address those during the Q&A segment. With that, let me just start by introducing you to the lab program. So we still have a lot of work, of course, to overcome the pandemic and the economic windfall from it, which surely has been a unique and challenging time for all of us. But it remains clearer than ever that we must work collectively to address climate change, which is a crisis of global magnitude facing us all in the years and decades and centuries to come. Scaling up all types of investment, especially from the private sector, will be a crucial element in the transition to a climate resilient, clean energy economy. One of the other pieces of work that CPI is known for is tracking trends and flows in global climate investment. And according to the most recent analysis, the annual average invested in climate change mitigation and adaptation hovers right around $500 billion US, which is a positive trend, but far short of the trillions needed to address climate change. As one reference point, even though we're not really sure what the full amount of investment would be to address climate change fully, the IPCC estimates that somewhere between $1.6 and $3.8 trillion annually is required in supply side energy systems alone to keep warming within a 1.5 degree scenario. So we need to move from billions to trillions invested rapidly, and the majority of that funding will need to come from the private sector. However, there are a lot of barriers standing in the way of scaling up investment in climate finance, including an inadequate access to or a high cost of capital, policy and knowledge gaps, and a key factor here is investor risk, whether real or perceived. This is particularly true within the context of developing and emerging economies where the lab focuses especially. So how does the lab aim to tackle this challenge? The program was launched in 2014 with a mission to play a key role in bridging this investment gap by identifying, developing, and launching new sustainable finance solutions that have the potential to drive billions of dollars in private investment into low carbon, climate resilient projects in developing countries. The lab tends to focus on earlier stage ideas that have potential to scale significantly over time. Many, but not all of the ideas employ a blended finance approach, that is leveraging public or concessional finance effectively in order to de-risk the earlier stages of development and implementation. We'll give 3 concrete examples later in the webinar, but previous types of instruments have included various types of fund models, bonds, structured equity vehicles, insurance products, different kinds of guarantees, lending platforms, pay for service or pay for success models, as well as securitization structures, among others. And again, we'll give some examples a little bit later so you can get a better feel for what the lab is looking for. So one of the key elements that sets the lab apart and makes it successful is that we're fortunate to have a diverse and very broad network of partners that include investors and sustainable finance experts from governments, financial services firms, development banks, philanthropies, and other corporate partners. Our members are actively involved throughout the process of identifying and developing lab ideas, and in many cases, invest directly as well. The lab's theory of change revolves around 3 pillars: the importance of collaboration between the public and private sectors, openly sourcing concepts for transformative financial instruments from innovators around the world, many of you on the call, surely, and a powerful network of financiers and policymakers to move solutions selected by and developed through the lab into action quickly. For those that may be new to the lab, I just want to quickly illustrate in a bit more detail how the program works. So firstly, we have an open global call for innovative investment solutions, which has brought in hundreds of ideas from a diverse group of proponents in our first several years. Successful proponents have included startups, entrepreneurs, boutique fund managers, and large institutions from the public and private sectors, as well as academics, nonprofits, and NGOs, both large and small. The lab's call for ideas is really open to all innovators. We keep it intentionally broad to encourage as much innovation as possible. Once the call for ideas concludes, which is going to be on December 20th this year, the Secretariat will screen submissions against an established set of criteria to determine eligibility. And then ourselves, along with lab members, actually will go ahead and refine those, and the lab members vote to select the most promising ideas through remote screening and then in-person review through a series of meetings, both at the local and global level. At the development stage, the Secretariat, lab members, and working groups comprised of other experts partner with the selected lab proponents over several months to develop these early stage concepts into bankable financial solutions. Once the analytical phase is concluded, lab members vote to endorse the final instrument designs, which is a way to signal their readiness for launch and full support. The focus then moves to fundraising to launch pilots with support from the lab's network. In this phase, the Secretariat provides an additional year of targeted support to help ensure endorsed instruments get off the ground quickly and move to market. So hopefully that's a helpful introduction to the lab. There's a lot more information on our website, including detailed guidelines and a really helpful FAQ document. I think Julio is going to be posting those links in the chat now. But just note that these refer to the current cycle and will certainly be updated when we open the next call for ideas in October. I'll now turn it over to Carla Orrego, Manager of Continued Support, to go over some specific case studies of ideas that the lab has developed into financial instruments. Over to you, Carla.
Thank you, Ben. Good morning, everyone. Thank you for joining us today. My name is Carla Orrego, and I am going to briefly describe 3 cases of instruments selected in the past 3 cycles, so you can have a better sense of which type of ideas we are looking for. The first case study is the PREC Aggregation Fund. It is a revolving fund aiming to monetize and bundle environmental attributes of renewable energy projects to provide the project developers with an additional revenue stream. PRECs stands for Peace Renewable Certificates, which are a type of high-quality international renewable energy certificate, thanks to the economic and social impacts that renewable energy projects deliver to communities in fragile contexts, in addition to their environmental benefits. The fund aims to tap into the growing market of energy certificates, which are especially popular among international corporations. For example, the proponents, Energy Peace Partners, already issue PRECs from 2 renewable energy projects in the Democratic Republic of Congo and sold them to Microsoft and Google. So how does this work? The fund works with project developers to provide upfront PREC revenue equivalent to approximately 10% of the project construction costs in exchange for the PRECs generated by the project. The transaction is based on a forward purchase commercial agreement between the fund and the project developer prior to initiating construction. Once construction is finalized, the fund can apply directly for certification and have the PRECs issue as the energy is generated. These certified PRECs are then aggregated at the fund level and traded on voluntary markets. The aggregation function of the fund allows for cross-funding of various projects and operational flexibility. This is an instrument from the current 2021 cycle and was selected because it's highly innovative and catalytic features. First, the fund addresses some of the major barriers to investment in renewables in fragile countries. Second, the fund is domiciled in a stable jurisdiction, and the use of RECs as the underlying securities minimize the political and currency risk. And third, it gives a provision to project developers of a commercial agreement with a guaranteed payment, which helps also to de-risk the construction finance for additional lenders. The PREC can provide a strong catalytic potential by unlocking between 9 and 19 times more capital from other sources of capital and enabling generally small and medium-sized locally based developers to bring their renewable projects to life. By catalyzing investments, for example, $1 invested can help avoid 15.5 tons of CO2 and provide energy access to about 32 households. Also, an important aspect of this is that the delivery of energy infrastructure has the potential to improve the quality of life of communities in surrounding areas and foster economic growth. Renewable energy plants working with the fund could generate more than 100,000 megawatts per hour over 13 years, providing energy access to 325,000 households and creating more than 2,000 jobs. Now, moving to our second case study. Climate Adaptation Notes, also known as CAN, is an instrument that aims to address water scarcity in Southern Africa by streamlining project financing for water and wastewater infrastructure. South Africa is one of the world's most water-stressed regions, but public funding for the repair, replacement, and development of infrastructure is very limited. So in that way, CAN combines short-term project financing for construction from commercial banks and long-term asset-based infrastructure funding from institutional investors. What this means is that it combines the construction financing and refinancing phases of climate adaptation projects into a single bond, which is then administered through a debt capital markets platform. The platform will also have the capacity to manage the performance monitoring of project metrics. The instrument is looking to tap into the abundant private capital available in local debt capital markets and is designed to catalyze and increase capital flows and lower financing costs for this type of projects. CAN was endorsed in 2020, last year, and it was selected for its innovative approach to address water scarcity and the potential to increase the pipeline of bankable projects. It brings together commercial banks and institutional investors to develop a viable structure that overcomes barriers for investing in climate-related water risks. Also, the instrument seeks to allocate the technical and credit risk associated to the financial actors best equipped to manage each of those. The first pilot will fund projects that reduce the severity of water shortages by improving infrastructure against extreme weather events and enhance efficiency to expand sustainable water supply per capita. It is projected that the initial implementation would increase the overall treatment capacity by approximately 9 megaliters per day, reaching an additional 900,000 municipal residents. Moreover, this could also yield additional resilience outcomes, including a decline in the frequency of days or weeks with water use restrictions, a decline in household flooded during extreme storm events, an increase in the number of households with climate resilient food supply. So now moving into our third case study, Risco, or the Restoration Insurance Company, is the first of its kind social enterprise that overcomes existing barriers to mangrove protection by connecting the adaptation benefits and mitigation benefits of mangrove to the beneficiaries of these values. In most cases, these beneficiaries do not have the knowledge or resources needed to protect mangroves. So Risco aims to conserve and restore mangrove ecosystems in emerging economies with high exposure to storms and flooding, and with people and assets located close to the coastline. It will invest in conservation and restoration in areas where mangroves can provide property damage reduction benefits and generate blue carbon credits. In that way, Risco will generate revenues based on insurance savings from these mangrove risk reduction benefits and the sale of blue carbon credits, overcoming the typical financing barriers for these activities. This is an instrument from the 2019 cycle, and it stood out because of its bold theory of change. Risco is the first company to monetize risk reduction and blue carbon benefits of mangrove, but also it is the first one to advance the insurance instrument's ability to incorporate mangroves into their risk models. Also, it is a very replicable mechanism that can be implemented in many countries. For example, if applied on the top 10 most promising countries, it is expected to generate about $500 million in revenue over a 10-year period. Risco has the potential for significant impact related to reduced and avoided emissions and coastal protection. In terms of mitigation, over a period of 10 years, the pilot will provide avoided emissions and sequestration of more than 603,000 tons of CO2. The equivalent of the annual electricity use of nearly 100,000 homes. It will also provide important climate resilience benefits such as flood risk reduction and livelihood benefits for local communities, particularly women who account for the majority of users of mangrove-related sources. I hope this overview gave you a sense of the types of ideas we're looking for. These cases illustrate how the different instruments address a climate-related issue in a specific sector, and at the same time, targeting several SDG goals that could help achieve great impact on the ground. That said, all instruments that have gone through our program fit the lab for defining criteria: innovation, financial sustainability, catalytic potential, and actionability. Now Ben is going to explain these lab criteria in more detail. Over to you, Ben.
Thanks so much, Carla. So now that we understand the basic lab premise and how it works, as well as some examples of successful instruments, we'll go ahead and dive into the selection process and what we're looking for. So we'll be providing additional detail to all of you on lab criteria when you receive the just some more details about the call for ideas this year, but briefly. The first criteria is actionability. Lab ideas should identify entities able to implement the idea and a clear pathway to doing so, including a defined time frame, key activities, and project milestones. They should also identify potential challenges and strategies for dealing with them. Next is innovation. Lab ideas should demonstrate how the idea addresses barriers to climate finance that have either not yet been addressed or will be addressed more effectively than existing approaches in the market. Third is catalytic potential, which is the ability of the idea to mobilize private sources of climate finance within a large market, its potential for scale up within that target market, and eventual replication in other markets. This also speaks to the ability to deliver and show clearly measurable socioeconomic, development, and climate impacts. And last but not least is financial sustainability. High quality lab submissions will have a clear strategy for phasing out public or philanthropic financial support over time and achieving market viability on commercial terms. They should also identify challenges and risks in achieving these objectives in their pathway to market and strategies for managing those risks. Overall, the lab looks for financial instrument concepts that can accelerate climate-related investment and mitigation, so reducing greenhouse gas emissions and adaptation, adapting and building resilience to the effects of climate change. The lab typically does not focus on new technologies, as our experience and network are best suited to the innovative finance space. As long as it is a climate finance instrument, in other words, something that mobilizes investment for climate relevant projects and will be implemented in developing and emerging economies, we will consider it. When the call for ideas opens in October, we usually announce a group of specialty areas that we're targeting for the coming cycle. Last year, this was sustainable cities, food systems, and energy access. And we also had dedicated regional programs in Brazil and Southern Africa. For 2022, we're still figuring out what will be the specialty areas, but at this point, we can say that strong ideas lying outside of the priority areas will also be considered. So please do apply, even if your proposal doesn't fit within them. We always reserve slots for some of the best ideas overall, even if those don't fit with the particular regional and thematic streams that we're prioritizing on an annual basis, as long as they fit those criteria that we discussed earlier. So actually being a sustainable finance, climate finance instrument to channel investment on the one, meeting the lab criteria, secondly, and thirdly, focus on developing or emerging economies. So just moving on to our focus on green recovery. Clearly the pandemic and the resulting economic crisis have highlighted fragilities globally and the importance of building more resilient systems, economically, politically, and in terms of global health, of course. A green economic recovery, so one that is socially just and environmentally sustainable, building back better, addressing both people's needs for decent work, health, and the planet's need for protection, is crucial in ensuring a sustainable and prosperous future and pathway out of this pandemic and the crisis that has come along with it. The lab really has a key role to play here. So by identifying and supporting the deployment and development of solutions that can support green recovery efforts in developing countries around the world. We're really encouraging proponents this year to highlight how their idea supports job creation in industries or projects that reduce emissions or increase climate resilience and adaptation in the target market. We also encourage proponents to note how their idea aligns with public sector green recovery priorities or planned investments, and or its potential to create inclusive economic growth and address poverty alleviation or income disparities in particularly vulnerable communities and individuals. So with that said, why should you submit your idea? If your idea is selected, your team will receive intensive in-kind analytical, networking, and communication support valued at approximately $250,000 US in in-kind contributions from the Secretariat team. Selected instruments also benefit crucially from expert guidance from leaders in climate finance drawn from the lab's membership across the public and private sectors, as well as CPI's broader network of experts. This support in the form of technical guidance, political capital, and potentially also financial capital can be extremely valuable in getting instruments off the ground. The lab membership has been active, not only in terms of technical support, but also have been frequent investors in lab instruments, I think, to the tune of almost $400 million at this point over the last 6 years. So moving on here, just to kind of show where the lab program sits in the ecosystem of other incubator and accelerator programs. This is, of course, not a comprehensive look, but we've showed some logos of some similar programs here. We recently did a survey of green economy and climate finance incubator and accelerators, many of which have been really close partners of the lab over the years. That lab ideas coming out of the program have gone into, or that we've received submissions from some of these programs. But we found that the lab is fairly unique among similar initiatives in this ecosystem. Our setup is a coalition of public, private, and development finance investors our focus on blended finance solutions for climate investment, and the intensive technical support package that we provide rather than a prize program or light touch technical support as many of the other incubator and accelerator programs do. All these aspects really set us apart from the vast majority of similar programs around the world. The lab's approach is unique. It's difficult and very labor intensive from the Secretariat side as well as through our network. It's a lot of time and a lot of effort, but it's proven highly effective and very worth it. So this is kind of what we feel like sets us apart from the many fantastic initiatives that are happening in the climate finance space right now. So once ideas are selected, they go through the development phase from approximately February to September. This is focused on refining instrument mechanics, developing financial models and impact assessments, identifying risks, and developing an implementation plan to go to market. In September, when the lab members convene and vote on whether to formally endorse each instrument, a project in which CPI's communication team helps develop core promotional and analytical materials, and in which proponents have the chance to pitch to potential investors and donors through the annual lab demo day. After endorsement, the proponents shift focus basically to implementation, and as noted before, they receive targeted CPI analytical support on a few further deliverables over a one-year period to help ensure the ideas move to market quickly. And then we offer basically ongoing networking and publicity support, continuing to connect you with events and with investors and other interested parties in the lab network, tracking and sharing your progress on an ongoing basis. Once you're in, that's a permanent benefit of being an alumni. So at this point, we're actually going to move into the next phase of the webinar and take your questions. So just a reminder to reiterate, we'll try to answer any questions that we can, but many of the specific thematic and regional details for the 2022 lab call for ideas that we're launching in October are still being worked out with the lab steering group. We do plan to host another webinar in November to share a bit more about the themes and regions for next cycle and answer specific questions related to that. So we'll definitely be in touch. If you sign up for our newsletter, we'll be able to communicate that when it comes out. So if you'd like to ask a question, please type it in the chat box now. Thank you. We'll just go ahead and take a quick pause as we gather questions.
Thank you, Ben. Thank you, Carla. So we are starting to get a few questions that were asked during your presentation, Carlos. So I have the first one here from Azul Munoz. Thank you, Azul. She asks if the lab is willing to expand the focus region to other countries such as Bolivia.
So just to note, while we do have set regional programs that have a certain number of instruments allocated to them, we accept and welcome submissions from all developing countries that are looking at any emerging economy, including Bolivia. We've had a number of instruments implemented in various regions and single country and regional initiatives in Latin America, even though we haven't had a specifically dedicated program outside of Brazil. So certainly we would welcome those. For example, we have 2 instruments in this year's cycle that are focused on West Africa, even though we did not have a regional West Africa program. Those just ended up being the highest quality submissions in 2 of the categories this year. So we have the thematic streams, which again for this coming cycle are yet to be announced. Last year they were energy access, cities, and food systems. So those could certainly be focused on Bolivia or any developing country. And then we do reserve at least 1 slot for what we call a wild card, which is an instrument that may not fit into the established regional and thematic categories that are launched each year, just to ensure that we have some flexibility and the lab members are able to select some of the highest quality solutions, even if they don't fit within those categories.
And I think this answers also Pradeep's question. He asks if there's scope for India too. Yes, even if there isn't any specific spot for India, ideas from India can apply for sure. Another question here, David Houghton asks, do you provide advisory services to climate impact funds?
So the advisory services that we offer through the lab are not via, so CPI does as an institution through one of our work streams does provide in certain cases advisory services for the most part to financial institutions and governments historically through our work stream that we call Effective Finance. The lab's advisory services are delivered through the lab's network. So CPI analysts alongside a working group, usually comprised of somewhere between 10 and 15 institutions that are on a pro bono basis and dedicating their time through the lab network, but that is only for ideas that are selected into the program. So there is certainly very intensive advisory services provided, but that is only for proponents who are selected into the lab.
Another question about geography. So Seval Selik asks, well, he says that Turkey has a specific position regarding development. So does the lab accept ideas from Turkey?
That's a good question. I think we would. I'm not sure that there's been any finalist ideas with a focus on Turkey in the past. Quite frankly, I would say that our primary focus has been on sub-Saharan Africa, various economies in Latin America, and South and Southeast Asia, and small island developing states. We've not had a lot of submissions in the past, or at least those that have come through as finalists for the MENA as a whole, I would say, and for either Turkey, Middle East, or the Caucasus or Eastern Europe, so sort of higher middle income countries. Most has been on kind of either LDCs or on middle and lower middle income countries.
Thanks, Ben. So this one goes to Carla because it's about one of the case studies. So Monica asks, which institutions guarantee the PRECs? Supranationals?
Sure. So the PRECs are supported by a blended finance fund. There are no specific guarantees. And the idea or the goal of using this structure is to mobilize private capital using multiple de-risking tools. So there are more specific details into this, but ultimately the idea of using the fund structure is to get it to a path of profitability for this instrument.
Yes, and just a reminder, this instrument is still in development and will be launching it by the end of September. So expect to get a report. So you can find the report we are producing on the PREC by the end of September. Question from Frederic Guarino. The CPI work on correlating specific climate action solutions on a global level? And if not, is there interest in doing so?
I guess that I'm not sure that I fully understand the question in terms of collating. So the CPI, I would say through as a research and advisory entity, certainly takes part in in noting successful climate finance solutions via the lab and through our research as a whole. I would say, okay, that's helpful as in a library of solutions. So we certainly list all of the endorsed lab instruments on our website. What we are not is a matchmaking service or a comprehensive list of all climate finance solutions. I think there are other institutions that are doing that or trying to do that, but that's not our primary mission. But we're certainly aware of some other institutions that do a great job at that and can go ahead and send that information on to you if you need it.
Next question from Iame Gowe. The question is related to whether one can apply if one is a technical service provider, but need to link to a climate financial instrument, blended finance developer to meet the lab requirements, thus combining technical support with unlocking investment opportunity. The focus area is Southern Africa.
That's a great question. I think it depends, I would say. For the most part, successful submissions will be coming from not necessarily one entity. It can also be a group of entities of partners. We often have very successful solutions that have come, say, from an NGO that are partnering with a fund manager. We have also, in certain cases, had say a service provider or an expert submit a lab idea that's a fantastic concept. They've been admitted into the program, and through the program, we've helped them to identify either a fund manager or an implementation partner. But in terms of actionability, the actionability criteria, we're looking at the team's track record and their ability to create, refine, and ultimately launch and carry forward a financial instrument. So if the team or the institution does not have that in-house, it would make that submission a bit more challenging to come through. So I'd hesitate to give a hard and fast answer on that. I think it depends on what the solution is, what the institution is, and then what the potential for bringing partners in would be through the lab process. But ideally, it would be a team that already has those capabilities in-house.
A quick question from Ming Sun. Does the lab support projects from China?
So we have not in the past. What we have done is actually tried a bit to expand the lab's reach to include some China-based financial institutions. China as a focus area is certainly something that we have looked into, but at the current moment, it's not a regional priority for the lab. If you have an innovative finance solution that is focused on China, especially if there may be application in other countries, we'd certainly welcome that submission.
René Bornomi asks, how have financial advisory firms worked in the past to build a solution and fund sustainable projects? Is there a need to partner with an investment institution?
Yeah, happy to give some examples here. I mean, I may even call you out, Carla. Thought you were getting out of this already, but yeah, just to break up the questions a little bit. I think we've had a couple of interesting financial advisory institutions as proponents. I'm thinking maybe we can give examples of Green Fidique or Craft as sort of hybrid fund managers, financial advisory institutions that we've worked really closely with, and kind of the way that that's worked as examples. But yeah, Carla, maybe I'll just kick that over to you to see how you'd like to answer that one.
Sure. So we have experiences both way, financial institutions being proponents and then finding the relevant partners to implement on the ground the solution, or having whether it's a startup or an NGO, submitting the proposal and then partnering with a financial institution that could be, in most cases, an asset manager to implement the solution. So Ben's examples are good. We have Craft, we have Green Fidic, in which the financial advisory firm was the proponent. And then on the other side, we have SAF or Connexus, which partner with an asset manager and launch the respective instruments. So it could go both ways, and there's no need to submit the idea having the partner. We've helped connect the proponents with the relevant partners during the lab process. Somehow it could add some strength to your application, but it's not a must, I would say. I don't know if you want to complement that.
I think that was great, Carla. Nothing to add.
Now a question from Abshek. Are securitization-like solutions for early decommissioning of coal-fired plants which fund renewable projects and securitize the difference between coal and renewable energy tariff is eligible?
I think we'd have to learn a little bit more about the solution, but it sounds pretty interesting. Definitely would welcome a closer look at your proposal there.
Second question from Mingson: does the lab support renewable energy startups?
Absolutely. If the renewable energy startup and their submission are focused on a financial solution, so and this is a key point here. We've often worked with startups and entrepreneurial proponents, and I would say the lab has really special value and potentially the most value for smaller institutions, whether they are small asset managers or advisory institutions or startups, and because we're able to kind of augment the efforts of a smaller team, both with our in-house expertise and also with the lab network's expertise as a whole. But we're a bit different from the majority of incubator and accelerator programs because we're not focused specifically on raising capital for or supporting the development and deployment of startups that are focused on products, goods, or services. So the lab's unique focus is around financial innovation. So if you are a renewable energy startup that is looking to scale your operations through a new fund model or a securitization model or a guarantee structure or something like this to overcome market barriers in the deployment of renewables, whether that is on a rooftop solar home systems scale or mini grid or even grid scale, this is certainly something that the lab would support. So hopefully that's important. Yes, absolutely, we support renewable energy startups, but there has to be a financial innovation component to the submission, even if the company behind it is at its core a renewable energy project developer or a technology developer.
Thank you, Ben. So we don't have new questions. We still have time for taking your questions, so you can type into the chat box. So while you do that, Ben, let me ask you a more general question. What degree of information and development must the proponent be able to show in the submission form?
That's a tough question, Julio. Thanks, though. Yeah, it's a good one, and again, it it depends. We have accepted pretty early stage concepts, as well as those that have already gone through a pilot. I would say, and I'd also welcome Carla's perspective on this, having worked with a number of successful proponents over the years, that the top submissions tend to be a concept that is very well formulated and very captivating, and a team that has done a great deal of sounding out of their concept, some initial modeling, hopefully to generate some expectations in terms of the capital stack and returns that can be expected for investors, as well as the climate and development impacts. To the extent that you're able to show those quantitatively as well as qualitatively in your submission, that strengthens it. If there are kind of gaps, and this speaks to some of the earlier questions, I think gaps in the proponent profile in terms of expertise or track record, if you're able to formulate a team that is well balanced and can kind of get ahead of some of those challenges or risks that may be facing your idea in order to go to market, those are all very positive things. Initial conversations with investors and some investor interest, whether they be philanthropic or grant-focused donors or commercial investors, those are also very positive. So if you're able to show a little bit of interest, those tend to be the ideas that end up going forward. With that in mind, there's a careful balance here, because you need to be able to show that the lab is going to have a material impact and value in order to bring your idea to market. So something that is on its way to reaching first close already, and there isn't a very coherent case for the lab's technical support, may also not be selected because it could be too far developed. So that sweet spot between being, let's say, a fully baked concept, but also in need of the lab's network and our technical expertise to bring it to market, is typically where we're looking. Carla, I don't know if you have anything to add there.
Well, that was a great overview. I maybe want to highlight two things. One is the team. We really think that having or demonstrating how the team complements each other and how this team is gonna make this idea successful. It's very important. And the other thing is how your idea differentiates from other things that are already in the market. So for example, we receive a lot of ideas that are platforms that in some way are P2P lending platforms, which we can find a lot in the market already. We receive a lot of securitization ideas or revolving funds, and we do have many of those in our portfolio, but it should be very innovative, and you should highlight what differentiates that from the plenty other ideas that already exist. So I would focus on those two things when you're thinking about your submission, because what we're looking for here is innovation. So that's important when you apply.
Next question from Eduardo Carvalho. Have you been able to support first-time fund managers in fundraising, assuming that venture capital fund focus on nature-based solutions in the tropics through deployment of carbon-backed loans aligns with the lab selection criteria?
Yes, we have been able to support some first-time fund managers. We've had several first-time fund managers that have been successful and have come through the lab program and have ended up raising significant capital through the lab. However, I would also note on the actionability criteria, as we discussed earlier, team track record and experience is crucial. So even if this is a first-time fund, we as the Secretariat and also the lab members are going to look at the profiles, background, and team track record of potentially raising other funds, or engaging in either project development or successfully raising capital in other contexts of the team that's submitting. So whether it's a team that is a first time raising fund, or whether that fund has raised capital in the past, is less critical than the track record of the team and also the structure of the idea.
And then how much time will a proponent need to dedicate to the lab if the idea is selected? So this is a question from myself, since we don't have new questions, still waiting on the group here to type in. But how much time does a proponent need to reserve for working with the lab?
A lot. It's a pretty intensive process. So this really depends on how the team is comprised. So some of our proponent teams have several people dedicated to the lab process. We typically always ask for 1 or 2 dedicated proponents to have at least 50% of their time. So at least 2 days a week, 1 to 2 people throughout the lab process. Sometimes teams have chosen to dedicate more. Often with the lab, as in many things in life, you get out what you put in. So if teams are able to dedicate a significant amount of time, not only to this process during the 6 months of technical support, but also to continued support in terms of fundraising afterwards, those have typically been the most successful in terms of capital raising and actually going to market. And yes, the lab would support green bond ideas. We've developed several debt vehicles and different approaches on green bonds. Of course, the key here is innovation in terms of structure or geography. And even if I think the related question was also around. Oh, sorry, I was reading one that we already answered. So I think we're good. Julio, back to you.
Yeah, I think, well, we still have time for a few more questions, but I don't see any new questions here. So Ben, I think that's it. Oh, sorry, Monica, just in. Which criteria do you use to determine if the bonds are green or sustainable? ICMA, CBI?
Or climate bonds initiative. So we've had both of those rating green bond rating agencies pretty involved in the lab process. I wouldn't say that we're using one over the other. Again, what we want to see is something that is actually an improvement and something that is innovative and potentially more catalytic, more impactful than what we're currently seeing in the market. So if it's just a sort of standard green bond, that's probably not going to be super interesting to our members. But yes, of course, I mean, in order to basically get through the door and through the selection process, if you're proposing a green bond, you would have to very clearly articulate which standard that meets and actually how this product is improving on the existing green bonds that are out there in the market.
Thank you, Ben. I think that's it.
Great. Well, thanks so much for your interest and the excellent questions that have come through. Of course, if you had a question that didn't get answered, please go ahead and send us an email, lab.cpi@cpiglobal.org. And I think we'll also have a little poll coming up just to ask if you want to subscribe to our newsletter. We will not spam you, I promise. This is just very occasional updates on the lab, and this will will help to ensure that you're up to date when we go ahead and launch the call for ideas in a couple of months. Furthermore, so this recorded webinar will be available on our website within about 5 business days or so, and we really look forward to hearing from you and hopefully seeing many of your submissions when we open the call for ideas in October, and maybe seeing some of you on the shorter, more targeted follow-on webinar that we're planning to host in November. So thanks so much.